Welcome to the INREM podcast, where we discuss the law for real estate investors. Andy and Sean are both attorneys. Nothing said in this discussion should be considered legal advice. We're simply providing information and education. You should consult with an attorney in your state regarding any specific legal issue that you may have. Hey, everybody. Good afternoon. I'm Andy Fowler, and I'm here with Sean St. Clair. We are live from the Arizona Buy and Hold Real Estate Investor Meetup. It's taking place at Scottsdale Area Association of Realtors. If you're new to the show, give us a like. Subscribe to our channel. You can find us on Facebook or YouTube. Our YouTube handle is at INREM Podcast. That's at INREM Podcast. Give us a like I said, subscribe. That would really help us out. With that, we have with us right now Augie Panev, who is the founder, the host of the Meet and Greet. Augie, thanks for having us again.
No, guys, thanks for coming again. I really like it. So hopefully we can do this every time.
Yeah, for sure. We'd love to. So for any of the real estate investors who are watching live and thinking about coming to this event in the future or watching, and this may be their first time, why don't you tell them a little bit about the event, what you guys do, and what opportunities there are?
So we started the event probably a year ago, and we wanted to provide valuable information for investors that are looking to buy and hold rental properties. So we're more into long-term investment strategies. So on the event, we come network with like-minded people, and we invite professionals to educate us on different topics related to long-term buy and hold investments. So it's great. Starts every last Tuesday of the month, 4 o'clock to about 7, 8, depends how long you want to stay. We have drinks, food, nice people, and great presenters. So we try to stay very um, to what's going on with the market, to educate people what's happening. So, like for example, as we know, the market has been shifting big time in the last few months. We're going into a recession, and one of the big shifts that nobody's talking about is the short-term rental market, the Airbnb market. So there's a huge shift is happening. In a recession, usually travel tends to slow down quite a bit. So, and there's a lot of new regulations with the local governments, and short-term rentals might be struggling for a little bit. So, I invited a good friend of mine, Andrew LeBaron, and he has a lot of experience in Airbnb management. So today we're going to be talking about how to buy and manage properties during recession, so you know what to be prepared for, and if there's a hit, at least you know what to do. So
Excellent. Well, we're looking forward to that topic. Uh, Tell us a little bit about the early portion of the event. We're basically just networking and things like that. Is that what's going on?
yeah, so between 4 and 5 during our live podcast, outside there's a bar, there's drinks, so people are coming in, so networking, talking, and just having fun. And right around 5 o'clock, we start presenting, talking about the event, and then in between, sometimes we have another break of 15-20 minutes, more networking, so you can get to know. It's all about knowing more people, getting into the community, helping each other.
Well, that's one of the things I've come away with in talking with a variety of folks who have come to your event and continue coming to your event is, in addition to good content, right? They're learning something, but it's a huge opportunity to market, right? The ability to find out other investors that are doing, finding out what works, diversifying within economy shifts and figuring that out. It really seems to be a huge benefit. Do you agree?
Oh yes, there's all kinds of people. There's people that are looking to buy, the people looking to sell. There's attorneys like you, mortgage guys. We had judges, and so it's pretty good crowd. So you can learn from each other too.
Excellent. Well, thanks, Augie. We're looking forward to the event and looking forward to hearing Andrew and his presentation tonight.
Yeah, and we'll be streaming it live too, right? Yeah.
Yeah, yeah. We're going to be streaming the presentation live. And I guess if anybody's looking live or watching us live right now and they live, fairly close, come on down, right?
Yeah, it's not that far away. So
Yeah.
okay.
Excellent.
Yeah,
Thanks, guys.
get down here. Augie, thanks so much for being with us. If you're just joining us for our live stream podcast, we are again at the Arizona Buy and Hold Real Estate Investor Meetup. That is taking place at the Scottsdale Area Association of Realtors. We just spoke with Augie Panev, the founder and host of this event. It's an awesome marketing opportunity, an awesome learning opportunity. If you were here, you would see that there's just an unlimited supply of food and drinks. It's basically all that you could wish for. So if you're not here, shame on you, but we'll see you next week. With that, why don't we're going to bring on our speaker today. Let me, as he comes up, I'm going to pose a question to you that we have from the audience. My partner and I cannot decide on the direction of our LLC. We don't have an operating agreement. We don't know how to proceed. How do we resolve the dispute?
So
Are they hosed?
no, I mean, they're going to have to come to a resolution. I mean, if they have a dispute already, they may think about not doing an operating agreement and just calling it good and
Call it
moving
a
on.
day? Yeah.
But no, there's always mediation or even consulting with, and I've done this where business owners who are, they've just formed a business. They're maybe not sure how to move forward, and they've basically paid for an hour of my time. And I've sat down with them and said, hey, here's what we can do on paper, and here's what we can document. Here's some provisions that we can put in that will help, you guys moving forward so that if future disputes arise, you have an ability to deal with them. And also a lot of things that when you're in business with somebody, essentially it's like a marriage, right? Personalities may or may not work together. They may clash at times. And so it's important to have the proper provisions in, say, an operating agreement, and then also to supplement that operating agreement by what we call a buy-sell agreement, which basically allows owners to exit out of the company, of the membership in the company. If they just want to move on, if they want to do something else, if they just can't work together, then there's provisions that basically explain how they, separate. And that basically the buy sell is almost like a prenuptial agreement for business owners. It allows them to have provisions in there that state what payments are made and who's going to take what if they separate and go their different directions.
Awesome. Thanks for the information. With that, we are going to go to the guest and the speaker tonight at the Buy and Hold Meetup. That's Andrew LeBaron. Andrew, thanks so much for joining us.
Hey, thanks for having me, guys.
Yeah. So tonight you're talking about managing and working with short-term rentals during market shifts and possible recessions. Why don't you give us a little bit of and our listeners information about you, about your background in that subject, and what you're up to.
Thanks. So I've been in the short-term rental space for about 6.5 years now. Built a company around it to manage or scratch our own itch to manage our own rentals as investors. We didn't want to give away 20-30% commissions to companies out there that are taking a huge, hefty fee just to do some pretty simple tasks on the daily. So we built buymoretime.com, and we started exploding about 3 years ago. And now we're in 7 states. We're in 3 countries, 7 states, and growing. And we do all the work that nobody wants to do in the short-term rental space: concierge, communication with guests, communication with vendors, so on and so forth, reporting. And it's been a really interesting time, especially in the last 12 months. As for me, I'm a buyer. I'm an investor. I buy properties that are more short-term rental based or experience based. It's not like buying a house for a rental. It's not being a landlord. Totally different world, totally different niche. But yeah, no, I really look forward to the buying opportunities that are coming up here in the next 12 to 18 months. And I just have that investor perspective rather than just a vendor perspective.
So, in working in multiple states, I know here in Arizona there aren't tons of regulations on short-term rentals, although there's some, real estate licensing considerations as far as the length of time that these can be rented and to have a non-licensed manager. And then now the state has passed a regulation basically allowing cities and municipalities to regulate, parties and noise and things like that, which they think, some of these cities that are anti short-term rentals are going to, pass some ordinances and become, active in enforcement. But I'm curious, as far as you working in other states, what kind of regulations are you coming across in other states that impact the operations of a short-term rental?
Great question. So we're able to bob and weave those regulations by being a co-host. So we leverage the platform, the liability of the platform, the insurance built into the platform, and the regulation that that current state or municipality has against platforms such as Airbnb, VRBO, Booking.com. We do have a legal team that looks deeper into how we can be in that state. I know California is tricky depending on where in California. States that are, I guess, property manager friendly would be the Sunbelt states: Arizona, Texas, Florida, and we're able to be a co-host on the platform itself. Now, are we able to show up and be the property manager in that particular state? We can if we're licensed in that state, but for now, we get around that by being a co-host, and we handle all the duties and activities that typical concierge would do.
Now we have a lot of real estate investors and maybe even aspiring real estate investors who follow us and watch this. Give them an idea. How did you get into the space generally in real estate investing?
Yeah, about 7 years ago, I jumped into a niche that is not looked upon in a good light called wholesaling. A lot of people know what wholesaling is. If you're not familiar, it's basically having an interest to purchase and selling your contract to purchase to someone else for a fee. And that's how I started. Did really well until I didn't do really well and decided buying everything. Instead of wholesaling it, I'd just buy it. And I came across a unique transaction. It was a lease option, lease purchase transaction on an FHA loan. We're going to get really complicated here. You can't do seller carry on an FHA. I won't get too deep in the weeds, but long story short, we had two different agreements. We had a lease agreement and we had an option to purchase. And we tried leasing this, or we tried wholesaling the contract out to other people. We couldn't find any buyers for it. This was in Mesa. And long story short, I said, okay, why don't we just do this this Airbnb thing? Why don't we just furnish this and throw it up on Airbnb, see what happens? And this is years ago. It was about 5.5 years ago. And so we get a U-Haul truck. We go to a Goodwill. We load it up with all this furniture, rugs, couches, chairs, whatever. And it was just today, by today's standards, it looked terrible. But at the time, we were just willing to try it out. It was a test. We got bookings that month, and on a property, and I'll even tell you where it's at, Gilbert and Brown, or excuse me, Gilbert and Brown. We were making what market rent would have been $1350 at that time. We were making about double that. And I thought, okay, we went to Goodwill. We got garbage stuff. Okay, we were just kind of guessing, hoping. And then people were leaving us 5-star reviews. Oh, we loved it. This is a great location. This is wonderful. We want to come back. I'm like, come back? Well, to what? And so then we got serious. We said, okay, cool. Let's make a great experience. Let's do this for real. So then we put in another probably $15,000 into the place, made it look nice. And again, 2 to 3x the typical market rent. And I'm like, this is not legal. Something's wrong. So we leveraged that capital, went and bought another one. We did the same thing. Did another one, did the same thing. Bought one in Scottsdale, did the same thing. Actually, we did one in Scottsdale near the Greyhawk community. They didn't like that. A lot of the HOAs over there hate that. Well, obviously, Scottsdale hates all that. But anyways, this was 5 years ago, so it didn't matter. And we just kept doing it. Wash, rinse, repeat, copy, paste, copy, paste, copy, paste. And it was like, holy cow, why would you be a landlord? You're crazy, So, and that's where we are today. So,
Very interesting. We like to ask also folks that join us here what their favorite investment strategy is, but it kind of sounds like in talking with you, obviously you found a niche in what you do and this, but it sounds like you prefer to buy and hold. Long-term acquiring asset type strategy?
yeah, I do. Today my business model is a little bit different, but prior we would just leverage private investors and we'd go buy stuff and they would carry title with us. And um, in the very beginning, it was wholesaling. Then it turned to fix and flip. Then I'm realizing I'm giving away all this equity. I'm giving away all. I could have rode that wave, but I just handed out to the new buyers, and people are sitting on it. They're sleeping on money overnight. Overnight, it doubles in value, and that hurt. So I started buying and holding everything that I found. And today we do something totally different. Of course, we manage the short-term rentals like normal, all across the areas that we want to manage them. Um, on multiple platforms, but now we're buying motels and we convert them into apartments. So totally unique strategy. And that's a whole different discussion. We could talk about that another time, but there's zoning curiosities in that where we take C2, we rezone to R3, we can keep it commercial zoned, we can do short-term rental on this side and do long-term on this side. And but yeah, my main strategy is buy and hold.
So you mentioned the shifting market and that you are thinking that there might be some opportunities there. And I don't want to get too far into maybe your presentation tonight, but talk to us a little bit about that. What are you seeing as far as the market? What are you seeing as far as the opportunities? And when is that window that you're kind of predicting?
Well, we know one of the biggest issues right now is that the Fed's trying to curb inflation, and it's not going to happen. They'll probably get to 2023, 2024, finally begin to curb inflation as we see it right now. You got avocados that are $10 a pop, So what does that naturally do? In a time like this, the consumer is going to be using less and less cash. That's discretionary, correct? But one of the biggest things that they buy is housing. Okay, so there's going to be a lot more renters out there that are selling their properties to corporations, to other buyers. And I believe Ken McElroy stated that the first time in American history, we're going to have below 60% of American homeownership. Wow. So, okay, we're going to have a big pool of tenants out there looking for a place to live. 7.2% is the mortgage rates right now due to the arbitrage after the Feds raised the rate 75 basis points. We're probably going to see 8% plus mortgage rates coming up. That's fine. I mean, it's terrible, but it's going to be great for investors. You're going to see some incredible pricing on property. The problem is you're competing with corporations in buying the real estate. It's not going to be, it's not going to be like, in 2008 when Blackstone was buying everything on hedge fund capital. It's now you got 30 Blackstones out there, with billion-dollar books looking to pick up anything they can. So it's still going to be competitive, which isn't going to drive prices totally low. Everybody thinks that there's going to be a massive crash. We're going to see a 40, 50% deduction. I don't think it's going to get there. You'll probably see 25 to 40%, maybe 35%, but you're competing with everyone else to buy still.
And you think a lot of that has to do with just the sheer corporate, like hedge fund demand for housing. There definitely is that narrative, right? It's the you will own no assets and you'll be happy in 2030. They preach that, but in the background, the big hedge funds are buying up everything, so they've got a giant rental book.
Yeah, they're not leveraging debt. They're going all in on equity. So if you're looking to buy something with debt, why would you buy it at 8%? You'd be silly. And how are you going to compete with a fund manager who can pick it up on equity only? Especially when everyone's lowering the price. We saw stagnation of properties selling on the market. Now they're lowering the price. Oh, let's lower it 20%. Let's lower it 30%. No one's buying. Okay, finally they're buying my home, my Scottsdale house that was, 1.4 million a year and a half ago. Now I can only get 950, for it. And that's when investors show up and say, okay, cool. Well, we're not using debt. We'll pick it up. So that's the problem.
Do you see or foresee us having a return of the short sale?
Probably. I don't know. That's a good question. I've heard that. I've heard that question before too, but the problem with that is you have banks immediately right when you go into mortgage defaults, right? So you have all these mortgage defaults that occurred. The first person, the first entity to reach out to that borrower is the bank itself. If I'm JP Morgan Chase and I got a borrower that's struggling to make the payment, I'm going to capitalize on their struggle. Okay. Chase is, all these large banks are really smart. Okay, cool. Well, here's a letter. We're going to send it to you first because we're going to know about it first. Let's remodify your loan. Remember back in 08, I mean,
Sure.
loan mods, so, let's figure out a refi. Let's figure out something. And that's base number one. So a lot of people are going to work with their own banks. You also have all these other hedge funds or all these other privatized companies like HomeTap that show up and say, "Hey, we'll take care of what you're behind." Okay, it's another Reg D 506C company where they go out and they buy non-performing notes. So to answer your question, I don't think it's going to be as crazy it was before because there's way too many companies out there looking to prey on people that are behind or in default. If there is a short sell season, I don't think it's going to be a big season. I don't think it's going to be massive.
So here in Arizona, and you may have experienced this, HOAs are starting to figure out or try to figure out how they can eliminate short-term rentals in their communities. And so they're going and trying to obtain enough signatures or votes of the members to amend the CCNRs. Are you coming across that as far as your management goes? And have the HOAs been, and have you guys fought back at all and trying to, establish that, those amendments are invalid?
It's funny because I think one of the not craziest, but one of the most strictest HOAs is in Ahwatukee. And it's there's an HOA that is there. I think it's a Red Rock something HOA. I can't remember the name. Red Mountain Park or Park something. Anyways, I got a demand letter from an attorney that they represented the HOA saying, you're in violation of XXX and X. It was basically a cease and desist. But we followed it. We're not going to fight back against that. There's a reason why HOAs are there. And there's a reason, if you agree to the CCNRs and you read them, then you should abide by them, especially if you're going to be controlling assets. And it doesn't matter if you own or control an asset in an HOA. There's a big difference. A homeowners association doesn't, it stands for anybody that's transacting or using any asset or controlling any asset inside that vicinity. I was recently talking to Bianca Bono on a 12 News interview where she was asking me questions about Mayor John Giles of Mesa, new regulation that they're coming out with, parties and stuff. It's all common sense stuff. It's not, you shouldn't be having massive parties. You shouldn't be parking in the streets all crazy. I'm totally for it. I'm usually for HOAs, which is funny. It doesn't seem like a property manager like myself would come from that point of view, but I'm for a lot of their, codes, covenants, and restrictions that they enforce.
Well, what I was getting at, and I appreciate your position, which is, hey, if you buy into an HOA and the CCNR say no rentals for less than 30 days, then no rentals for less than 30 days, right? I mean, that's what you've agreed to when you purchase. But what we're kind of seeing on our end, and we're being consulted with on a regular basis, is HOAs where when the property's purchased, so let's say your owner of a property that you manage, your owner goes in, buys a property in the HOA, they do their due diligence, they look at the CCNRs, and the CCNRs are clean. You can have a short-term rental. There's no time restrictions on rentals within that community. Well, then the board decides, oh, we're going to do a campaign and we're going to amend the CCNRs to basically exclude short-term rentals. So now your owner who bought in there thinking that they could use it as a short-term rental is as unable to. Have you come across any of those HOAs? And, what's kind of, how have you guys kind of dealt with that?
Totally. I believe Dobson Ranch in Mesa had that happen. And I believe there's another one. I don't know if it's the Val Vista Lakes community in Gilbert. I believe it is. They came across that, and they're just coming down hard on operators. And again, I'm actually for it. You know, if you have, I'm actually pro. I wasn't before, but I'm actually pro CCNRs of the HOA and the enforcement thereof, because that actually helps the market of the short-term rental industry. You know, it creates a need for short-term rentals, and it allows operators like myself to get more creative and get outside of an HOA and actually build something cool, instead of, Jimmy's house in the middle of the street, which is next to Susie's house, and and I'm not going to properly maintain it. But yeah, no, they do that all the time. Amendments are part of, I mean, if you read it in there, they have to have a majority vote, and they get together and they can create an amendment. Yeah.
Very interesting. Well, Andrew, we appreciate you being here. We're going to let you get around and mingle and meet the folks that you're going to be speaking to. One last question we'd like to ask the folks that are with us: what's the best investment advice that you've ever received?
Learn how to raise private capital. That's number one. If you learn how to raise private capital and you wait for great deals, they pay for themselves.
Get out and meet people, right?
That's it.
Come to events like this would probably be a good start. Well, Andrew, thanks so much. We're looking forward to your talk. We'll be live streaming that, so if you're watching, stick with us, stay around. Andrew LeBaron, thanks so much. Look forward to talking with you again.
Thanks, guys.
Thanks, Andrew.
All right, guys, if you're just tuning in, we are live at the Arizona Buy and Hold Real Estate Investor Meetup. That is taking place starting at 5 at the Scottsdale Area Association of Realtors. And when I say starting at 5, the Andrew's speech is going to be starting at 5, but actually the marketing, the opportunities to meet folks, other investors in the community, that really starts at 4 when our live stream started. So if you can come out and join us, we'd love to have you. Also, a reminder, we appreciate you following us on the live stream, and we'd love it if you went to our YouTube channel. Find us at INREM Podcast. Our handle, again, is at INREM Podcast. Subscribe to the channel. Give us a like. We provide a lot of legal content and content about the real estate investors, how we help them, what they're doing in the industry, what's going on. We would appreciate the follow. With Sean, I'm going to go to you for another question here. From one of our listeners: I'm interested in a property, but I think the owner has died. What can I do to find the owner's heirs to see if they are interested in selling?
So that's a little outside of the scope of legal advice, but I'll do my best to, respond. So if you have a situation where the owner has died and you're like, hey, this may be a good investment opportunity, it may be a good transaction, one thing you can do is cross-reference that with the court records. And so if the property's in Maricopa County, I would basically research the Maricopa County Superior Court, and in particular, the probate docket. And so you can go to the Superior Court's website. It's publicly available, and you can search for case information. And in particular, you can narrow that search to probate case information. And then I would type in the owner's name, who you understand to be deceased. And if a probate has been filed, that will pop up, and it will give you the name of the attorney that's filed it, if an attorney is involved. And it will also provide you with the name of the personal representative, the person that's applying to oversee the probate. And then from there, you can reach out to, either the attorney or the personal representative and see if a transaction with respect to the property is possible.
Yeah, I know a lawyer. Most lawyers would love to get that call, because one of the main things the estate is doing, if it's gotten to that point, is trying to liquidate assets, right?
Correct. Yeah. And so, a lot of times properties that are left like that are not in the best shape. They need work normally. And so it's perfect for an investor who can bring in cash, provide, infuse cash to the estate, and then the estate's happy, because a lot of times an estate is found money, right? I mean, you have some relative or parent that passes away. they earn their money. It's not your money, right? As far as an heir or beneficiary of the estate. And so, a lot of times it's just found money. And so, uh, they're happy to receive that cash and have a no, issues closing, meaning there's, it's not, you're not having to rely upon financing, a loan or anything like that. It's just simple, hey, 10, 15, 20 days, 30 days, we're going to close, no hassles. And so that is a good option. Now, if you can't find an heir on the Superior Court, there are databases you can utilize. Our firm subscribes to a database that we basically can run an heir search. We can run a search to track down addresses and phone numbers. In fact, we had one where I forget all the underlying details, but we needed to track down these heirs, and there was about 5 of them. So we knew the names, but that's about it. We were able to use this database and send out the certified mailings we were required to send out. Oh, I know. A lender. It was a private lender, and that lender had passed away, leaving, but they never released the deed of trust, even though the loan was paid off. And so we had to track down the heirs to get them to release that deed of trust for us. And so we sent out our certified mailing, which is required by statute, to start the clock running of getting either a payoff figure or a release of that deed of trust. And they also had phone numbers. So once we sent that letter out, I waited about a week and I started calling the numbers, and I finally reached somebody and I explained the situation, said, you know, if you haven't already, you're going to be receiving this letter. Here's what we're trying to do. We need you and your siblings to release this lien against the property. And they researched it on their own, rightfully so, and realized, yeah, it's been paid off. And so we were able to have them execute the release. So you can use public databases or paid databases to track down heirs and track down their contact information and phone number. That's another way to go about it.
The other reason I think oftentimes if you can find a probate that's open, or you're able to search the property owner, if you think they're deceased and you find them in the probate records and contact their lawyer, is oftentimes that's the only asset of the estate, the only asset of significant value. And I know that there's times that the lawyer's fee might be contingent upon the sale of that property itself, right? So that can be a good, they obviously have an incentive to try to connect any potential buyers, whatever they may be. Again, if you're just joining us, we appreciate you being with us. We are live at the Buy and Hold Meetup here at the Scottsdale Area Association of Realtors, hosted by Augie Panev today. If you're watching or if you're going to be here live, the speaker is going to be Andrew LeBaron. He's going to be talking about how to buy and manage short-term rentals during a shifting market and recession. If you're watching us live on the live stream, make sure to stay with us. We'll have a temporary intermission that goes from our podcast to his speech. So it'll be good information, give you a taste on what the Buy and Hold Meetup is like, what you could stand to receive if you come here. And if you come here live, you get food, you get drinks, and you get the opportunity to meet folks. If you missed it, I thought it was really interesting. Andrew's, we asked him one of the best investment advice that he had ever received was figuring out a way to raise private capital. I thought that was interesting, especially given that we're at an event where I've spoken with so many people that say, I come just to meet real estate investors, meet other real estate investors in the space, to know how to gain those relationships. I thought that was really good. While we wait for another guest, Sean, I have another question for you. And I think this one's right up your alley. And in fact, I know it is. I'm trying to sell my property, but I recently discovered the mortgage I paid off a few years ago is still showing in the public records as a lien against my property. I'm not getting anywhere with my lender. Imagine that. What can I do?
So yeah, this is right up my alley. I do a lot of this work. So what you can do is if you have an unreleased mortgage or deed of trust, I'll talk first here in Arizona, but I've also done some of this outside of Arizona, and the statutes outside of Arizona tend to be those state statutes similar to Arizona's, and even there's some federal statutes that apply for federally insured mortgage loans. But basically, here in Arizona, we have two statutes that apply to that situation. The first is a statute that states that if a lender fails to release a paid off deed of trust within 30 days from the date of its release, they're subject to damages and liability for the damages caused by the failure to release that deed of trust. So that's number one. That's the starting point. Then the second statute states that if I write a letter, certified letter to my lender and basically say, hey, look, we paid off this deed of trust and you failed to release it. You have 30 days now to release it. And if they don't release, not only are they subject to damages, but they're subject to statutory damages of $1,000.
Okay.
Well, you know, you have a pending escrow, and by the time you figure out that this deed of trust is still out there, that closing date's coming really fast. Well, 30 days means a delay in closing.
Right.
I don't like 30 days. Okay. So what we do to accelerate this process is, in addition to demanding the release, we send what's called a request for payoff. And what that means is our statutes provide that any lender, any beneficiary of a deed of trust, or any servicer of a loan has a statutory obligation upon proper request to provide a payoff of the loan within 14 days. And if they don't, they're liable for actual damages plus statutory damages of $500. So what we do is, in addition to demanding the payoff or demanding the release, we demand a payoff. So now you've taken that 30-day period and you've accelerated it so that they only have 14 days to respond. Because look, lender, your loan, your deed of trust is still of record.
Right.
So since it's still of record, you have statutory duties. And one of those statutory duties is to provide a payoff. And if that payoff is zero, great. I'll give it to the title company and we'll close tomorrow. Because a zero payoff is as good as a release to a title company.
Right.
And so give us a zero payoff and we're good to go. Or give us some payoff. If you think an amount is still owed, give us some form of payoff. But you have to, within 14 days, give us a payoff if your deed of trust is still of record. So we've accelerated now from a 30-day release period to a 14-day period. And then we send that letter out. And of course, that letter ends up in the abyss, right? You know, if you send it to a servicer, or a lot of our listeners probably know about mortgage electronic registration systems,
Sure.
which is basically a clearinghouse for these loans. And so if you send it to them, it just ends up in the abyss. So you have to then call. And, you know, basically I call almost on a daily basis to these lenders, or somebody from my office calls on a daily basis to these lenders, basically saying, hey, did you get that letter? Yeah. When can we get that payoff? You know, we're researching it. Now, researching it isn't good enough. When are we getting the payoff? Oh, well, it'll be 30 days. No, 30 days isn't good enough because you have a statutory requirement to provide it within 14 days. When are we getting the payoff? And we do that regularly. And generally, a significant portion of the time, the lender releases within that 14 days because they can't provide the payoff. There is no payoff to provide. So they just release.
Now, understandably, there's a built up amount of frustration in this person's question. And that no doubt is because they've had to sit on the phone and deal with somebody on behalf of the mortgage company that can't tell them anything, doesn't know anything, and is of no value. And they probably waited for an hour just to get to that person. And there's almost no chance that they'll get from that person to the next person who might know what they're doing. So how have you found, or how do you, because you don't have some sort of special access or anything. I mean, outside of you're an attorney, how have you found, and how do you maneuver that same kind of problem?
So if it's a company we've worked with before, um, I'm really good about documenting who has been responsive and who I've worked with. So, for example, MERS, I have some contacts there that get you around the switchboard, if you will, and get you into somebody who can make an actual decision. As well as, there's some other lenders, servicers out there who, assuming they're still, employed there, I have, direct access to, just because I kept detailed notes of who actually was able to resolve the prior issues. But you basically just have to keep asking. If it's somebody new, keep asking for a supervisor. Now, one thing I want to talk about in Arizona, that's unique to Arizona and that's really cool, is, let's say the 14 days comes and goes, and you still don't have your payoff statement or your release, but you have proof and you can establish that the loan has been paid, that you've made a payoff. If you can establish that, Arizona has a statutory procedure that allows you to go into court and to file an action for release of that deed of trust, and to apply to the court to, based upon the proof of payoff, to apply to the court to allow you to release, or to enter an order releasing the deed of trust without service on the lender. It's an ex parte action where you don't even have to serve the lender. You just simply go into court and say, hey, judge, this lender is not located in Maricopa County, which most of them are. Most servicers don't have offices or branches here in Maricopa County.
Right.
They're not located in Maricopa County, and I have proof that we've paid off the lien. Release. And we've been successful in a matter of days presenting that to the judge and saying, look, judge, here's the case, here's the situation, here's the statute. Please sign a release of this deed of trust. And the judge signs it. We provide that certified copy to escrow, and we close the transaction.
So what is really the seller in this case? What are they out and doing that action? I guess their attorney's fees, because it's ex parte, right?
Yeah.
So the court's not going to award or force the bank to pay your attorney's fees.
Correct. So you're basically out attorney's fees at that point. Anywhere from, 2,500 to $6,000 is what you're looking at in fees to do the initial letter negotiations, and then, go all the way and get an order from the court releasing. It just depends, how much, elbow grease you're going to put in the beginning, how successful you're going to be in getting a hold of people, those types of things. So, there's a range there, but all in all, it's not, overly expensive to basically secure the release of your home. And the thing about our office is, if we have enough information and we're confident we can get that release, even if it's going to take us a little bit of effort, most of the time we will take payment out of close of escrow. So there's no amount of money up front that needs to be paid to our office in order to go through this process.
Very interesting. So, going back to kind of the beginning of part of this, if you get a client who comes in the door and they've got MERS, for instance, or one of these other lenders that you have some experience with, you're not just calling the number on the statement that they bring and working your way up. Some of these you've got some, you've already greased the wheel and are able to try to move through that a little bit faster. But it's good to know, in Arizona, at the very least, should it just become impossible, or should you maybe deal with like a lender that's out of business? They just were terrible at releasing their liens, right?
So we had one like this, where the lender was out of business, and so what I did was I went to a receiver had been appointed, and the FDIC had taken over. So I went to the FDIC, and federal law provides that the FDIC can release the deed of trust. And so I worked with the FDIC in obtaining the release where a servicer had gone under. Another scenario I had was the MERS was the beneficiary, and the servicer was being non-responsive, but MERS was like, well, we'll release, but we want to know that it's been paid off, that type of thing. And it was a VA loan.
Oh, interesting.
So I called up the VA because the VA keeps records of the loan balance, because in order for you to obtain a VA loan, you have to have so much available credit, basically, or an amount available to you. I forget the technical term, but so you can have multiple VA loans as long as they don't exceed a certain amount. And so the VA keeps track of the loan balance. So I called up the VA and said, hey, show me can you tell me how much the loan balance is on this? And they looked up and said, oh yeah, it's a zero loan balance.
Yeah.
And so I said, well, can you send me that paperwork? Yeah, we'll send it to you. So they sent that to me. Then I was able to present that as proof of the payoff and secure the release. So that was another example of where we, worked outside of the servicer through, a government agency in that case, to obtain the information that we needed to secure that release.
Interesting. All right. If you're just joining us, folks, we are live from the Arizona Buy and Hold Real Estate Investor Meetup, taking place at the Scottsdale Area Association of Realtors. Thanks so much for being with us. Reminder, immediately after our podcast here at around the 5 o'clock hour, we'll be transitioning. We'll go to a slight intermission. We'll be transitioning to the speaker at today's meetup, which is Andrew LeBaron. He will be speaking on how to buy and manage short-term rentals during a shifting market recession. So stay with us, and stay with us for that. That should be good. Also, make sure to follow us on Facebook, and follow us on YouTube. Our handle is at INREM Podcast. That is at INREM Podcast. We're devoted to providing legal content and real estate investor type content to you, the aspiring and the experienced real estate investor. We have time for another question, Sean?
Let's take a 5-minute break while we prepare for our next guest.
Okay, sounds good. We're going to take a brief break. Stick with us, and we will be back. Go ahead and put those headphones in. All right, everybody, we are back. We're going to talk with a guest that's joining us here who is in attendance here at the Scottsdale, Arizona Association of Realtors at the meet and greet. If you're just joining us again, that we are at the Buy and Hold Real Estate Investor Meetup, and which is a great marketing opportunity, a great place to come and learn and find out good content. And with us, we have as a guest one of the participants in it, Patrick. Thanks so much for joining us.
Yeah, absolutely. Great.
Patrick, tell us a little bit about you and what you do. Your real estate how you got into real estate investing.
Sure. So, I always found multifamily fascinating. Growing up, we actually owned a triplex and lived in one of the units and rented the other two out. And I found that pretty fascinating that others can help pay your mortgage. And so I kind of took that line of thinking and went to school at ASU, finished there, and got an internship in commercial real estate. Worked for a storage company here locally, and eventually, did a lot of acquisitions for them, doing financial analysis, underwriting, and eventually, found that I really enjoyed working with individual people. Let's say private individuals, not really large institutions. I just get a lot out of being able to help somebody to, push forward their investment goals. And I also like to be able to shake their hand and see an actual difference, just in their face or body language with something occurring in their life. So I tend to work with investors that, whatever I can do for them, whether it's 2 units or 100 units, that it makes a difference. And it's not just another one of 500 transactions. So, yeah, that's how I got in.
Now, have you been to the Buy and Hold meetup before?
This is the first one.
Okay,
Yeah.
how'd you learn about it? What brought you here?
I know Augie. So Augie and I, we have a monthly luncheon. We both have property management companies. I have a multifamily management company, and yeah, so him and I kind of mastermind about how to run an efficient, great property management company. He gives me ideas, I give him his, and yeah, that's how I learned.
So tell us about your multifamily management company. What's its name, and what's your kind of niche within that market if the name itself doesn't give it away?
Yeah, so it's the name is Get Multifamily Property Management. I did that on purpose to make it super simple to understand what we do. Don't really do commercial retail office. It's multifamily. We specialize in, I'd say, B and C class multifamily between 2 and 100 units throughout the Phoenix area. So,
What's been your experience so far with the market conditions? We speak with a lot of real estate investors, and that's kind of a topic. What's the market doing? Where's it going? Of course, that's crystal ball kind of stuff. But how has the market impacted what you do, and what does that look
yeah,
like?
it has. We've definitely noticed sales have slowed, and really, I think specifically on the commercial multifamily. So anything that's most people would call true investment properties, where there's no other reasoning. You know, some people buy 2 and 4 unit properties for not other reasons other than just pure investment. They might be paying a kid who's going to ASU and they want to buy him a place to live in, and it's a little less about the cash flow. There's other reasons. It's also easier to kind of place 500,000 to $1 million into a smaller property. But the larger properties, I'm seeing a really big hit. A lot more days on market for those, a lot less transactions. Um, yeah. So company wide, I'm seeing our sales slow, although they're still happening, and they're getting creative. I just put a deal in escrow today where it's a loan assumption along with a seller financed partial second. And we had to get real creative with the interest rate and the terms to be able to make that cash flow for the new buyer, because the seller had a real specific price in mind. So we were able to make that work. We just got that in escrow today. It was a 20 unit. But I'm also noticing, so overall sales are lower for me, transaction count wise, but management has really picked up. I think there's a lot of people who are stuck with properties they didn't think they were going to keep, and or just running into situations where maybe they couldn't refinance. And so they're looking at, maybe longer term holds than they're expecting. And so getting a lot of inquiries on new management.
What about rents? Have you seen any increase, decrease in vacancies? Have you been able to raise rents
Yeah.
to meet with inflation? And has that, are you seeing
So
defaults? That type of thing.
right now, we're not really having problems with raising rents. We're not, and we're not really going, 10%, 20% like bumps on renewals. But we are going for pretty, market rates if it's a vacant unit. We're generally doing 5%, let's say, on renewals. But I'm noticing anything probably 1,500 and under. And again, because I'm in B class, C class, 1,500 and under, we are doing a little bit longer term time frame to rent. But the stuff that's kind of on the lower end, where it's 800, 1,000, 1,200, that's still renting pretty easily. We're not having a problem with it. But overall, I would say, on the higher end, I'm seeing a lot of new inventory going to hit the market. I think I read CoStar says there's 30,000 in development for A-class properties. Most of it's A-class. So I think that's really going to increase vacancies over the short term.
So we like to ask guests that we've just met and are in the industry, what's your favorite, for our listeners, what's your favorite investment strategy within the real estate market?
Value add right now. Still looking for that, although it's still difficult. I'd say second is getting creative on the financing, on the acquisition, and third, we're looking for new opportunities, new development. Looking at infill, multifamily zoned lots, with even as something as small as 6,000 square feet, you might put a duplex on, all the way up to several acres. You could do several hundred units. So we're right now sourcing those opportunities and for certain buyers, and so I find that one of my favorite. Yeah.
So are you purchasing your units creatively, or are you financing? How are you going about acquiring properties?
So I'm brokering most of them,
Okay.
and so I just come across whatever deal it is, and what the need of the seller is, and whether it fixed something for me. 'Cause I'm not really buying right now unless the deal is really really good. But I have a lot of people looking, and normally in those cases I broker the deal, just like the one I was talking about today.
Now, one of the things I hear over and over from folks that come to the buy and hold meetup, in addition to what they learn, is just the ability to meet and expand their network. So in that, I know you've been out there expanding your network, meeting folks, but tell our listeners where they can find you, and the kind of and the type of folks that could use your services. How can they find you?
Yeah, I mean, we've got obviously a website, so it's getmultifamily.com. If they're looking for property management for multifamily, it's the same, Get Multifamily PM, like property management, the acronym.com. Those are the two easiest ways. I've got a phone number they can call. It's 602-366-5078. Those are the easiest ways to reach me.
Awesome, Patrick. Well, thanks so much for joining us. We really appreciate it, and enjoy the night.
Okay, awesome. Thank you very much.
Thanks, Patrick.
All right. If you are just joining us, folks, we are live here at the Arizona Buy and Hold Real Estate Investor Meetup, taking place at the Scottsdale Area Association of Realtors. Make sure to come and join us. We're also going to be live streaming tonight's topic, which is going to be by Andrew LeBaron, and that topic is how to buy and manage short-term rentals during a shifting market and recession. So you'll be able to watch that live stream here shortly. But Augie Panev does this event every month. It's a great opportunity to learn more about real estate investing, but meet people like Andrew, who you've heard tonight, like Patrick, who you've learned tonight. Like Sean or I, attorneys in the space who would love to meet you. So make sure to keep that on your calendar and look at doing that. I know we'll be going and shifting here soon to Andrew LeBaron, but before that, what do we have? Do we have time for another question?
Sure.
Another guess? All right. So question from from a listener. I'm working on uh, I'm working on a real estate investment with a new partner, and he can be hard to work with sometimes. What can I do to plan for the prospect of him and I not getting along in the future? Other than cutting bait and running now, which is always an option, what can you do to plan for that possibility? I guess you should probably plan for that possibility even if you like the person or everything's hunky dory right at the beginning, right?
Yeah, and that gets back to the other listener question about putting together an operating agreement, but you're already kind of dispute or fighting or arguing over it, or can't come to an agreement. So when you talk about going into business with somebody, you basically have to assume or go in like it's a marriage, and you need to document your relationship. And the best way to do that is an operating agreement in conjunction with a buy sell agreement. An operating agreement's good, and it's a starting point, and it defines your ownership interests. It does have some provisions in there dealing with what we call dissociation, which is a legal term of art for here in Arizona for a withdrawal or leaving the business. But that's not the end all. To me, you need to tailor that with a buy sell agreement, which is basically like your prenuptial agreement for business owners, which basically says, hey, if you leave, here's how you're going to go, and here's what the company's obligated to do. If you engage in wrongful conduct, here's how the company can basically kick you out or dissociate you from the company. If we just can't get along, here's how we're going to exit. If you die, if one member dies, here's what's being paid to their estate. If there's disability, here's what's going to happen in that scenario. So it has all these divorce. If you divorce and your the member's spouse ends up with an interest in the company, what happens then? And so the buy sell covers all of that and provides basically exit provisions for all of those circumstances so that the company can continue to operate. So you have to separate yourself from the company and realize that everything you do should be for the benefit of the company.
Sure.
Yeah.
Well, and the beauty of that question for our listener is uh, our show this morning was in detail on succession planning your exit strategy, whatever that may look like, and doing that on the front end of starting the company. Don't just start with an operating agreement. You need to be thinking about your exit strategy. So good information. All right, folks. Again, if you're just joining us, we are here live at the Arizona Buy and Hold Real Estate Investor Meetup. If you're following us here online, go to our YouTube channel. You can find us at InRem Podcast. That's at InRem Podcast. Give us a like, subscribe to the channel. We would really appreciate that. With that, we are going to be closing out our podcast. We're going to be shifting to tonight's speaker, which is Andrew LeBaron. And again, the topic that he'll be speaking on is how to buy and manage short-term rentals during a shifting market and recession. I know that's a hot topic. Arizona is a hot place for short-term rentals. I mean, hell, we've got the Super Bowl coming up. If you're not thinking about short-term rentals, then
money, money, money right there,
yeah,
man.
I mean,
I'm almost inclined to move out of my house and rent it for the week.
I'm not a short-term renter, and I think I might have to be given the Super Bowl and everything else. But I mean, I think the whole state becomes a short-term rental when the Super Bowl's in town.
Well, yeah, and it's the same week of the Waste Management Open,
Yeah,
right?
I
So
mean,
like
sportsman's
this is the place
paradise.
to be. Yeah, this is the place to be for that week.
Yeah. All right. Well, you convinced me. I guess I better go get a lawyer. All right. With that, we're going to go to an intermission. And when we come back, we're going to have Andrew LeBaron. And thanks so much for joining us. We'll see you next week, guys.
month is now 1,800. You guys feeling that? Okay. Need to learn how to use this quicker. Let's see. Forward, backward. Okay, cool. We're good. Pretty simple. Okay, how to buy and manage short-term rentals during a shifting market recession. Guys, most of everything we talk about today is going to be revolving around one theme, and it's you got to be different. Those of you who have short-term rentals right now know that if you're different or offer something different or better than what everyone else is offering, you're going to be just fine. You're going to have a high occupancy. You're going to have great reviews. It takes a lot more than just being different, though. We're going to talk about that. My company is buymoretime.com. So we manage short-term rentals, 7 states, 3 countries. We're all over. We are your co-host. When you're tired of doing all the nitty-gritty stuff and you don't want to pay Vacasa 30% on all your commissions, you call me. Okay? You go to buymoretime.com. You set up a discovery call, and we help you out. So we're in Florida. We're in Texas. We're in Arizona. We're in South Dakota. We're in some weird places too. But
is it a franchise?
no, just my company. It's a short-term rental management company that I created. So I built this company about 6 years ago to scratch my own itch because I needed help with my short-term rental. And I heard about Evolve. Raise your hand if you heard about Evolve. Okay. Now, some of you have never heard about Evolve or short-term rentals in general, so just bear with me. I'll explain it. Evolve is a really good company. Well, I think they're kind of good. They take a massive percentage of your commissions every month. And I thought, okay, as an investor, that's kind of silly. Why am I going to give away so much cash? I just need a team and software to manage my properties the right way. So that's why we build Buy More Time. So there's so much we're going to talk about today, what you see on the screen, but we're not going to cover everything. So if you want to have a one-on-one with me, we can. I'm going to give you some contact info at the end of this where you can reach out to me directly. All right? So our company, we have over 25,000 trips hosted, lots of trips. We're, like I mentioned before, we're in a few countries, 7 states and counting, and we have over 3 million in booking value right now. That actually is an older number. I think we're at like 5.5, 6 million in booking value. We learned a lot of stuff. So over the years, we've learned how to run a terrible short-term rental. This is on our own stuff. We've learned how to manage incorrectly. We've learned what works, what doesn't work. We even know the demographic of the perfect cleaner. If you want to know the perfect cleaner and the demographic of the perfect cleaner, I can tell you what that is. I won't tell you today, but you can reach out to me one-on-one. Who's a fan of Michael? Okay. Who's not? Raise your hand. Who's not? Chase! Good to see you. Hey, he's a close friend of mine. The white glove experience. Raise your hand if you kind of know what that might. What is the white glove experience? Who's got it? Who's got a quick definition for me? Go ahead.
Professional enthusiasm, trustworthy, passion.
Love it. Thank you, Angel. Go ahead, Chase.
When you walk by and you take your finger with a white glove and there's no dust after you wipe off the shelf, right?
Love it. Beautiful, right? Meticulous, clean, excellent. You know, everything's done for you. It's 5-star treatment. Who likes a white glove experience? Okay, I think we all do. When we travel, when we go to a resort, when we go to an Airbnb, when we go to a VRBO, whether it's booking.com, whatever OTA means online travel agency, whatever place we decide to go into, Hilton, Marriott, Radisson, we want to have an excellent white glove experience, right? It's where everything's handled for you. There's no issues. There's no ice. The ice machine doesn't work. No worries. We got you. Someone's gonna show up and take care of you, right? It's special care. It's attention. It's meticulous. If you have zero desire to invest heavy in experiences, create systems, calibrate your offering, or put up good money, just be a landlord, guys. Being a short-term rental manager, I'm going to get some heads that nod here pretty soon. Being a short-term rental manager requires you to provide a white glove experience for your guests, all right?
What does it mean to invest heavily in experiences? What do you guys think? Let's get some interaction here. Well, why would I say experiences when we're talking about properties?
Well, being in travel and experiences where you stay, and if you don't stay in the right location, you can't get the experience of the area. You have to drive too far. It just changes the whole pattern. You might not know where the best places are and why you're staying there. That's part of the experience. Plus, you could be in a place. I'll give you an example. I was coming down to buy a house down here. I stayed at the Fairmont in the Casitas, which was like over 2,000 a night. That's all that was left. And
How much a night?
over 2,000 a night. I was staying in a casita.
Okay.
But that's part of the experience, and that's all that was left. And it was important because I had to get down here, and there was nothing else left. And so when I go to get there, all of a sudden I see everybody doing walkie-talkies, and I said, "Oh, this doesn't feel right." I've been down the road several times. And I went up to him and he said, "Oh, are you staying here?" He said, "I'm supposed to tell you that it's Governor's Ball and you're the only one here that's not in Governor's Ball." So I get this beautiful invitation to join the Governor's Ball because I was staying in the compound of where they were. That's an experience.
That's cool.
And when you stay at certain places and do certain things, you get an experience you would never dream of in your normal life. And that's part of what I'm talking about, experiences.
Thanks for sharing that.
And how we do it.
So as short-term rental owners, and for those of you that have short-term rentals, you know that it's not just a place that you're selling for a night. You're selling a feeling, okay? I sound stupid, don't I? It sounds like a commercial, right? It's the truth, okay? Everybody and their dog and cat has a couch for you to sleep on, has a, oh, that's my, oh. There you go. I'll let you handle it. Yep. Everybody has a 3-bedroom house. Everybody has a 2-bedroom house. Everybody has a 1-bedroom condo. But what makes me stay at so-and-so's house versus his house? Well, it's probably because they have a $4,000 massage chair. Or it's probably because they have a heated hot tub or a heated pool and a hot tub. It's probably because they have a popcorn machine. Okay? Raise your hand if you've heard of AirDNA. Okay, AirDNA is a great software. And the number one search criteria for Northern Arizona was a hot tub. If I'm going to Show Low, if I'm going to Flagstaff, if I'm going to Pine Top, I live in Show Low, love it, recommend it. If I'm going up north, I want to be in a hot tub. Why? Because when it's snowing outside, people want to be in a hot tub. I don't know why. It's kind of funny. They just did, okay, whatever. That's what they want. So if you provide that experience, and we'll talk about that today, you're gonna be booked. You need to be able to create systems, and you got to calibrate your offering. You got to be different. You got to be super unique. And then you need to put up good money. In 2013, 2014, you could rent a couch on Airbnb. Okay, literally Airbnb means air, bed, and breakfast. That's what it means, air, bed, and breakfast. You probably didn't know what that was. Okay, Airbnb means air, bed, and breakfast. Some San Francisco cats decided to create this amazing company. I was actually at the time working with this guy, Chase, at Chase Bank. His name's Chase too. He works at Chase. It's catchy. Hey, Chase from Chase. Chase Bank. It's like Jake from State Farm. So I was working with him, and we were talking about with our friend Craig how Airbnb came about, and people were making $2,000, $3,000 on their couch. They were literally throwing the couch out there. There was liability insurance and everything else covering the guest coming to stay and sleep on a couch. We don't live in that time anymore, guys. Sorry. Everybody's got an Airbnb now. Okay? If you have a shed, you have an Airbnb. Everybody's got an Airbnb. Okay? If any of these sound overwhelming to you, stick around Augie and keep coming back and just be a landlord. Don't even focus on the short-term rental market because it's going to take a considerable amount of investment, creativity, imagination, so on and so forth. And I actually hope you get time to tell everyone about your place up in Prescott sometime. That's super neat. You got to hear what he's got going on. Okay, today we're going to answer some of these questions. What makes a profitable short-term rental? Where should I invest, and ultimately, is it worth it? Okay, we were just talking with the lady in blue. Sorry, what was your name? I'm going to ask you a question right when you take a bite of something, so you can have a mouth that's full and you can talk to me. Just kidding. Susanna, sorry. So she's saying, well, I'm thinking about going back to long term. Sometimes, actually, I would say 8 times out of 10 when I talk to people and consult over the phone, I tell them don't do short-term rental. I promise it's going to be a nightmare. Because maybe they say, hey, I don't want to invest the time, the effort, the money, the imagination, the creativity, and I would just rather have a long-term rental managed by some property manager that makes me $200, $300, $400 every month. If that's the case, do that. Okay. Most of the time, I'd say most of the time, your houses that you buy are better long-term than short-term. Okay, they're better long-term than short-term. Where should I invest? We'll discuss that, and ultimately, is it worth it? I think so, but only if you are unique and different. Okay, we're gonna play a game. It's gonna be a pretty simple game. It's not gonna be hard, but what stands out in the following photos of these properties? Shout it out. What stands out? Art? Someone say art? Spaceship. Spaceship? What the heck is on the screen? What is that? Does it float? Does it move? You have no idea what that is. You just know it looks like a place that you can go inside of. You have no idea. You're wondering. Who's seen this before? Incredibles. Who said it? Yeah. It's a recreation of The Incredibles. Yeah, lawsuits. Don't do that. Yeah, Disney's going after them. What do you think? Would anybody want to stay here? Does that not look nice? Who wants to wake up, sip some coffee, and look out on the canopy of trees? What are they selling you here? Experience, right? You get a feeling when you see this photo. If I'm scrolling through Airbnb or VRBO or any platform, and I see this, I'm booking. By the way, this is a real booking. And it's about $1,500 a night. That's a night. And some of it is cheap. Who said it was cheap? That's cheap? Well, you drop $2,000 a night somewhere. We're traveling together, okay? You can buy my room. That's cheap, man. Okay, found your private money lender. We're talking about raising private capital. There's your lady. Okay, you want to be here. Everyone wants to be here. When you see a photo and you want to be there, you know that that individual's probably doing pretty darn good on their short-term rental platform. There's another one, some more unique architecture. Let me highlight this one real quick. Oh my goodness. Forgot his name. There's a guy in Phoenix who's in our investor groups. I don't know why his name is failing me. He's a friend of mine. Apparently we're not that close. How terrible. Templeton Walker. Okay. Anybody know Templeton? Okay. Started a business where he's building these things. I go way back with Templeton. Okay. What's the difference in price between this and this? Huge. A couple bucks. You could probably get this built for $30K, $40K, maybe outfit it, dress it. What kind of income do you think this would bring you in every night? How much? $200 a night? Yeah, easy. Someone said it depends on location. Absolutely. But how many of these do you see floating around? Not very many. Not very many, right? There's some. Go ahead. It has wheels. So from the picture, I believe this is a tiny home, and it does have wheels. There's some really cool legal loopholes with this niche, if you're familiar. You could have yourself a tax-free property on someone else's property, and you can lease it out and maybe share some of you're paying tax by sharing some of the income probably with the person that you're sharing the property with. But this is not a real home. This probably has an NVD title, and it's just a trailer. These are just trailers, okay? Pretty cool. If you guys are way into sandcastles, this is probably your dream. Again, here's another manufactured style trailer. I'm sure this one has wheels as well. This one looks a little bit more complex, but again, it's cute. You've never seen it before, probably. If you have seen it, you've only seen it in a few places, and Google is probably one of them, because this is where I found it. So what do they have in common, guys? They're all different, right? Is this a 3-bedroom, 2-bath in Gilbert? Does a 3-bedroom, 2-bath in Gilbert make money? Better believe it. But does it make this type of money? No. Okay, so I'm going to tell you about this property. It's one of my favorites. In fact, the CEO of Airbnb, Brian Chesky, shared this in one of his recent addresses. Talked about the potato house. Anybody familiar with the potato house? Okay. It is a house in Idaho. It is not even a house, guys. It's a container that they put foam all around it in the shape of a potato. No toilet, no running water, no vanity. It's got a bed inside and an outhouse out front. It's booked for 3 years. It's booked for 3 years solid. Okay, if someone told me that's how easy it was to get into the short-term rental space, I would have done that years ago. Okay, there's a lot of people trying to replicate what these people are doing, but they came first to market. They're unique, they're different. It's an experience you're selling. So you don't need to buy a 3-bedroom, 2-bath house in Chandler or in Gilbert or in Scottsdale. Heaven forbid Scottsdale. Scottsdale doesn't allow this stuff. Okay? Got to be different. Again, I'm going to highlight this the whole time. If you're not different, if you're not creating something unique, something, wildly extravagant, then it's probably not worth your time. Are there other niches? Sorry, the brother with the pace hat over there. What's your name? Steven. So Steven mentioned he does corporate housing, okay, or corporate travelers. You kind of centered yourself in a niche where maybe traveling nurses, traveling surgeons, traveling professionals in Tempe. That's a great niche. That's an excellent niche. In fact, if you went a step ahead and went to Brazo Care or Banner and made conversation with the hospitality managers, you'd actually do really well. I know a couple people that are doing that. They're killing it. They're the first phone call when they have a traveling nurse. Excellent niche, okay? I wrote an article on being different. I love this image. Anyways, talk about how you should be different, how you can stand out. We're going to talk about that more in this conversation later on. Let's talk about where to invest. I'm going to read I hope you can read between the lines here. I typed in the word cough, not California. You need to invest in conservative areas, near hospitals, airports, beaches, lakes, landmarks, and shopping where the people are. So let me hear some ideas of where you could and should invest. Just blurt them out. Who said that? Yeah, by Cardinal City. Why?
Shopping. Super Bowl.
Super Bowl, right? How much are people getting for Super Bowl? How much are they getting a night for Super Bowl? No, she might show up and pay. Okay. Okay, so they're paying $500 to $3,000 a night. I've seen above $3,000 a night. In fact, I've seen $3,000 plus a night in Silverleaf. Okay, even though Silverleaf doesn't allow that. Anybody know what Silverleaf is? Really nice neighborhood. Like you probably do. I bet you do. Super nice neighborhood. They actually will shut that down pretty quick, so you got to be very secretive about it. But for the Super Bowl, you're going to make some really good income, especially if you have a property nearby, and especially if you market it towards the people that want to come here to see the Super Bowl in Glendale. So stay conservative. Tennessee is a great place, okay? Excellent place. People are making 4x, 5x their money, okay, in just a 3-year period. 36 months, they get 5x their cash on simple cash flow for Tennessee property. Excellent. Texas, another great place. I invest heavily in Texas, okay? Florida. You guys noticing a theme here? Arizona. I keep going. Oklahoma. You want more?
It's all red.
It's all red. Yeah. There's a reason. Regulation's low. And it's not just anywhere in these states, right? It's where there's attractions, where there's lakes, where there's streams, where there's airports, where there's beaches, okay? Usually where there's beaches, where there's lakes, or any other attraction, there's going to be more regulation. You will see it. There's some HOAs here locally that really don't like short-term rentals. Avoid HOAs. I probably should have added that to this slide. Who has a short-term rental in an HOA? I want to know. Oh, we have a hand. Go ahead. Where's yours at? Okay. And do they allow 30-day plus, or I mean, is that the regulation? You have to.
The rules don't have it specifically in there, so it feels like a loophole.
Until you get the demand letter from the attorney.
Yeah.
So Ahwatukee, you guys know Ahwatukee?
Yes.
I love Ahwatukee. Okay. Before the 202 connected, I had some short-term rentals in Ahwatukee. The day I set them up for listing and the day they went live is I think it was 3 days later, I got a demand letter from an attorney. Okay. Take it down. This does not follow our CC&Rs, our codes, covenants, and restrictions. Okay. Take it down. Read line 33, paragraph 4, footnote X. Like, they had it all laid out for me. I knew exactly. I mean, they didn't make it hard for me to find it. Like, I was in trouble. So I didn't fight back. I took it down. You need to follow the HOA guidelines. If you're going to buy a short-term rental, don't buy them in an HOA. Just don't do it. Okay. Just try really hard not to. Like, hey, honey, I want to buy an HOA. I want to buy a short-term rental. How about Greyhawk community? Nothing against Greyhawk. Love it. Beautiful community. But they're going to shut you down. Okay. You ain't going to last. Okay. Anyways, avoid HOAs. Wrote a post on how to check your competition, how to look up comparable nightly rates of your competition for free without using AirDNA. I talked about AirDNA. It's a waste of money. Don't even use it. Okay. You can do this for free without using a software. And I'm going to talk about kind of how I do this. So let's say you're brand new and you're a landlord. You're like, I'm going to have an Airbnb. I'm going to find out where I want to have my Airbnb. I want to pick Scottsdale. Yeah, let's do Scottsdale. Okay, cool. I'm going to look for a property in a Airbnb-friendly neighborhood in Scottsdale, and I'm going to buy it. But before I do that, I'm going to look at the prices nearby. So this is actually a real search in Scottsdale a while ago. There's actually a house called the Superman house. There's a couple houses actually. Like, these guys like took on DC, and other guys took on Marvel, and they decided just to build these Marvel and DC houses. Pretty cool. And they were booked for a lot of nights actually. $395 a night is actually pretty decent, especially when it's really saturated. So you're gonna open up your PC and you're gonna look on the right-hand side. You're gonna have a map. You can't do this on your phone. Okay, you have to do this on a PC or Mac. You can't. It has to be on the desktop. And you're gonna look at the price per night that other competitors are leasing their property for on Airbnb on an aggregate. So that's how I do it. If you're interested in getting into the short-term rental space, I highly recommend doing that first. This slide kind of shows how booked they are. Whenever you see these blocked out on Airbnb.com, you can assume that they are booked. Most of the time they're booked, or they're just blocked off by the owner. Okay, we're gonna talk about some ways to stand out. For those who are thinking about jumping into this short-term rental game, you gotta stand out, and these are some easy, cheap ways to do it. Now you're probably looking at a hot tub and a zip line. You're wondering, that's not cheap. That's not cheap. But I will tell you the ROI on a hot tub and a zip line. In northern Arizona, I got a guy who's got a zip line. We manage his property. He's got a $2 million property in Pine Top, and it's gorgeous. And people literally go there just for the zip line. You know, that's the thing that they talk about on the reviews. It's the thing they talk about when they're there. They message us at buymoretime.com. Hey, you know, how do we access the zip line? You know, and all the instructions are there. They have to read it. Hey, it's my buddy Brian. Good to see you, bud. So the zip line sells it for this listing. It does a really good job. Remember how we talked about the hot tub? Okay. More and more people are now investing in hot tubs. They're putting a hot tub. What's the cost of a hot tub? Anybody know?
Zero. Free.
Sometimes free? If you're willing to put in the legwork, there's a lot of free hot tubs out there. If you're like an engineer mind, you're like, I'm gonna go fix this hot tub and find a leak that's microscopic somewhere in this massive system, then you're in luck, because there's a lot of hot tubs out there. If you want a brand new hot tub, what do they range about? 3,000 to 4,000. I've seen them 7,000. If you want the really cool fancy lights, and if you want it to change your life and take you back in time, maybe 10, 20,000. So anyways, there's a lot of different types of hot tubs. I would recommend something that lasts on a deck and something that can be installed fairly quickly and something that can be maintained fairly easily, okay? These require maintenance, require your cleaning team to understand how the maintenance works on it. That's a whole different presentation. It's a whole different topic for a whole different day. Far right, massage chair. Has anybody sat in one of these? I got some heads. If you haven't, God bless you. I'm sorry. These are amazing. So I bought one. I paid about $4,800 for this chair. Now you're probably like, man, you're stupid. Why would you pay so much for a chair? Well, I know the return on investment of a silly chair. I know what people are doing near a mountain where people hike or they ski, so I put one in one of my properties. And in fact, that's one of my first photos. It's a massage chair. It's massage chair in a cabin, okay? And people come here and they use the massage chair. Massage chair went out one day. My whole listing is like destroyed now because it's literally revolving around a massage chair, okay? So I had to fix the massage chair. Ways to stand out. That's cool, huh? You guys want to be there right now, right? So who has traveled to a short-term rental with a theater room or a large, decadent entertainment system? A couple of us? Okay. When you're looking through a short-term rental directory or OTA, Airbnb, VRBO, Booking.com, this is probably one of the biggest, most used photos in all of the short-term rental universe, I would say. It's just the living room and a TV. It's like the number one photo. If you're scrolling through, it's a living room and a TV, living room and a TV. You could really invest heavy in one room and have a subpar bathroom, you know, and maybe a subpar kitchen. But if this is your first photo, do you think you're gonna get bookings? Yeah, you'll probably get bookings. This is awesome. This is just a random photo I found online. But I've seen short-term rentals with theater rooms like this, and they do really well. Brian, don't you have one that has like a large theater room similar to this?
Yeah, we're trying to convert like a garage into a theater room in our Vegas one right now.
So cool.
Yeah, just because you're right. And they can all come together in one room and watch something like that. It's gonna be the quickest.
Okay, Brian's a close friend of mine. I actually did something similar at one of his meetups. He's doing some really cool stuff. I highly recommend to follow him. He's taking experiences to a whole new level. This right here will do it. You know, you don't have to do anything else, but just really blow this up. You're gonna have 80% plus occupancy all year round. You'll be fine. Talk about fire pits.
I have a question.
Go ahead.
Are you looking for the experience to increase your number of days you rented, or the price per day per night?
Both.
And then how much more do you have a theater room? Say the rental was like $300 a night, I don't know what rentals are, $400 a night, say $400 a night.
Sure.
With theater room, what would that move it up to?
So that's a really good question. So let's see if we can quantify, you know, this amenity, this attraction, okay? And the way I do that is I look at listings all around this area, maybe within 5 square miles. Okay, if I'm looking, for example, in a destination place, we'll say Flagstaff. If I'm looking at Flagstaff within 5 square miles and I don't see anything like this, or maybe I see a couple, I'm gonna start looking at their listing and booking dates. Most of the time, some of the better ones around that have something similar to this are booked. And then I begin to look at what their price per night is. And it'll tell me what their price per night is. So it's all free info. So, okay, their price per night is $450 for something similar to this. I can assume, okay, I can deduce that if I added this to my listing, I'm gonna get similar rates. If I do better, what's the cost of doing better? And how fast am I gonna get that back? Right. Okay, so these are questions that all of us as investors have to ask. Go ahead.
Is this an operating expense or is it, do you capitalize it expense?
This is an upfront capital expenditure. If I go in, for example, just to let you know what I would do, if I wanted to build this, I would add this in the very beginning, and the maintenance on this is very low. It's just cleaning. Sorry, go ahead.
Something that I was going to express about something like this. When someone's looking for this nature, they're looking for something luxury. So that's just part of the luxury, which brings to an area that it has to fit the area to have that type of thing. If you go to an out of the way place, you're gonna get less for your money because most people aren't looking for that in an out of the way place, like Flagstaff, unless they're thinking about doing the Grand Canyon. But then we have to think of what kind of person, where is it gonna be, and how private that's gonna be, as well as that. So the value is really the location on having that type of thing, rather than having that type of thing.
Not so much. I'm gonna push back on you a little bit. So if I'm in Tempe and there are no other listings like this, and I'm competing, and I have this installed, what's that?
Who wants to go to Tempe, you know?
I know people making $1,000 a night in Tempe right now, 90+%
For the
occupancy.
games or something of that nature.
But they're unique, they're different. They offer something different. They probably offer something like this. Okay. This is a really cheap way to invest in your short-term rental. I say really cheap in a funny way. How much do you think this would cost? Any flippers in here? How much does this cost? 40K? Pretty good. Okay, 40,000 bucks. About 40. Okay, anywhere from 25 to maybe $45,000, depending on how bougie you want to make it or how nice or big you want to make it. I want you to ignore the house and pretend the house is just a 3-bedroom, 2-bath in Phoenix, maybe in North Phoenix. Okay, ignore the house. I know it's a very luxurious, beautiful double-decker home. Okay, everybody wants to be there. Ignore the house. Pretend it's just a 3-bedroom, 2-bath home in Deer Valley, but it's got this in the backyard. Okay, you think it's gonna get booked?
Yes. Oh, yeah.
It's gonna get booked.
Yes.
What's the price in Deer Valley? What do you think someone would pay for a 3-bedroom, 2-bath house with a super cool fire pit like that?
300, 400.
You guys are rich. Holy cow. I'm like 225 to 275. Maybe I need to up my price. Holy cow. So yeah, let's say conservative, 250 bucks. We'll say 350. 250 to 350 bucks a night. Okay, we'll have a margin of $100 a night. How soon is that money coming back to you if that's a $40,000 expenditure?
In a year?
Forget the debt service. Forget the debt service. We're not going to talk about mortgages. Just strictly revenue. Okay. Whatever you have as far as debt service is between you and your bank.
A year?
Okay. So in a year you get this back.
Yeah.
It's pretty good, isn't it?
Absolutely.
Okay. So after your year is that paid off? Now, how about year 2? Is your fire pit going to work in year 2?
Yes.
Yeah. You're going to be fine. What's your maintenance on a fire pit?
Like propane.
Right. So you have some monthly expenditures that occur. But the point I'm getting at is your amenities and attractions that will bring you a higher ROI are almost paramount to do at the very beginning of your investment journey when you have a short-term rental. You have to do this. If you don't, you're missing out tremendously. Go ahead.
Just for sure, there is a house here in Phoenix that is called the Airplane House. It has an airplane, like the airplane, in that house gets booked all the time.
Really?
Yeah.
Wow. See? So it's a themed place.
Yes.
It's unique. There's nothing else like it. Someone said Grand Canyon earlier. Was that you?
Yes.
Okay, so Williams is near the Grand Canyon. Who's familiar with Williams? If we were all smart, we'd all build geodesic domes in Williams, okay? Some of us are smart, not all of us. But Williams is booming. Williams is doing really well in the short-term rental space. And funny enough, there is a geodesic dome. And the dome literally only costs $12,000 to install. It's PVC outer, okay? It's not that big. It's probably 250 square feet inside. And it's making $250 a night. It's
out a year.
Well, it's booked out a year, so you even know which one I'm talking about. Okay,
Yeah.
$250 a night, booked out for a year. I don't know how many, maybe they have same-day check-ins, I don't know. But 365 days, we'll be conservative. Let's say 300 days. 300 days times 250, who's got that math? 70,000. So you're trading you're trading anywhere from 12 to 20K for 70 grand a year. Life's good, okay? Got to be different. Oh, I was almost gonna press next. It beat me. I know you guys, I can read your minds. I don't know if you guys knew that I'm a mind reader too, but I know when I showed this slide, you guys were thinking about liability. Okay, you guys were thinking about insurance. I'm not a lawyer, but these guys are. So you might want to talk to them. Now, Airbnb has something called air cover. Okay, I use the platforms. The platforms themselves have coverages. Now, they're very careful how they word their liability coverage. Very careful, right? Airbnb wants, honestly, zero liability, like any smart company does. But what you need to do is disclose in your description, there is a zip line that is wildly dangerous and you could die on it. There is a hot tub that you could drown in. Okay? I don't know if you're going to die from the massage chair. You might die from the massage chair. It's that comfortable. Actually, that's kind of cute. You probably should put that together. But as you disclose that, you should disclose that as best as possible. I've been in claims before with guests, and I haven't lost. They always pay out. Airbnb will pay you, but they pay you like 4 to 6 months down the line. So they'll send you a check, but it's going to take forever. You have to notate it. You have to take pictures of the damage or the theft, or the proof that the guest is lying. Cameras, never put them inside the property. Say it with me, no cameras in the property. Cameras on the outside only. Always have cameras on the outside of your property. Here's some more. This is a great way to stand out. Okay, e-bikes, awesome. Who's run?
I have.
Go ahead.
Anybody wants e-bikes? I have the hookup on e-bikes. My neighbor literally just started an e-bike company, brings in containers, and he's been sourcing product from China for 25, 30 years. Massive warehouse. He ships one bike minimum delivered to your property in 10 days or less. Some of these bikes fold up, you can get them in the back of your car. So the e-bikes, if you're looking to have those for Airbnbs, I'm your guy.
There it is.
Official reseller for Arizona. That made it, baby.
Does it come with a free subscription to WeChat?
Yeah, I'm gonna talk to you.
Just joking. I'm just joking. Okay, it's a joke. Kayaks. Another massive liability, right? Someone could drown. We could get hurt. Disclose it. It's really smart to actually work with an attorney. Perhaps have a one-pager. Have him create a one-pager, a disclosure sheet and liability waiver, and get it signed. We did that for a couple of our clients. We sent a DocuSign. They created the document. We did not. And the guest signed it. It's just another layer of protection. There's also insurance companies out there that will cover your short-term rental policy. They're getting cheaper. They're getting cheaper. Before, they used to be so expensive. Who knows Proper Insurance? The company's called Proper. It's a Warren Buffett company, actually. It's a Berkshire Hathaway company. Dude, your policy, your short-term rental policy on a regular house, which your normal insurance was probably like $1,200 to $2,000 a year. Proper Insurance was like $8,000. We'll cover all your short-term rental needs. You know, you pay us $8,000 policy. Well, you know, it's so expensive. So now there's some competition. We have Foremost. Foremost is a pretty decent insurance carrier that does short-term rental policies. I believe Allstate does everything. So I believe Allstate also now has a short-term rental policy.
Can I ask you, when you start talking about all these costs of doing this type of thing, when you amortize it out, what do you think the cost per year on what you would call a normal rental in Arizona? Not what I would call it, but what you would call a normal rental in Arizona. What do you think it costs somebody versus their cost to keep the business going and all that? Would you say that they would clear 8% a year after they're all said and done?
Yeah, depending on which metric you're looking at. You know, like cash on cash, I've seen 20% cash on cash. I mean, all of it depends on kind of what you said earlier, location, what you're offering,
Absolutely.
all of that depends. We've managed a tree house, okay? A tree house, like a house in a tree. Okay, and it was on a platform. It was about 800 square feet in a tree, and people are paying $400, $500, $600 a night to come stay in a tree house. What's the cost of a tree house? If I spent more than $30,000 on a tree house, my wife would kill me. If I'm making $600 a night on a tree house, my wife would love me. Okay, so it really just depends. To answer your question, that's really hard. Remember, we're talking about experiences. You have a wild and unique offering. People are going to come and they're gonna post on Instagram. They're gonna Facebook Live it. They're gonna show it to their YouTube followers. You know, it's different.
But still the question is, what are these people really clearing with all the costs to protect themselves and the maintenance and all the kind of things? Most probably aren't clearing more than 8% a year.
Again, it all depends. So I have a criteria. Maybe that's a better way to answer your question. What is my criteria?
Okay.
So I look for 10% plus cash on cash return. Okay, that's what I look for. Now, I do something unique and different. I actually buy motels and convert them into multifamily now. That comes with different metrics. We have investors, and our investors are throwing money at us, and we're giving them a 20% plus IRR, internal rate of return. That's a completely different topic. Again, different metrics. I don't need to make a killing on those deals. For short-term rentals, I find them volatile. I find them vulnerable to the markets. Okay, Feds just raised the rates by 75 basis points, which trickled down to arbitrage. Mortgage interest rates are climbing. We're at 7.22%. Is there less consumer spending right now?
Yes.
Will there be less consumer spending in 2023?
Yes.
Will there be less travelers for Airbnb? Will you need to stand out? Okay, listen to that. You need to be different. You need to offer something different. Offer something unique. Follow what Bryant is doing and what Augie's doing. They're doing some really cool stuff. Putt. This is kind of cool. There's a company out of Flagstaff wanting to build a company. They actually own a blinds company, and they're building something similar to Putt Tech. They're calling it something different. Tiger Woods actually has kind of a, I think he's starting a business. I'm not sure. Maybe someone can help me. Tiger Woods is starting like a unique top golf experience for putting. Okay. There's a guy that is building really unique custom putting greens in his backyard or in other people's backyards. It comes with lights and speakers, and everybody wants to live next to that house, right? Just ragers next door. Everybody's putting.
No HOA.
No HOA. I actually started at Brian's event. I started the whole thing with the question: who wants to live? And I want to see your hand, okay? Who wants to live next to an Airbnb? Why is that?
Because you have no control of who goes there and what kind of parties.
Okay, so I actually don't blame the HOAs. I was just talking with INREM, and we were discussing that. I'm actually on the side of the HOAs. First of all, HOAs help me keep a less saturated market. Number two, they make the place a little bit better. No one wants to live next to an Airbnb, okay? It also provides an opportunity for you to stand out and be unique and be away from the communities, away from the suburbs, all right? This one obviously has a neighbor. Okay, I'm not talking about this one particularly. This is pretty self-explanatory. You got to buy it right. At what price are you guys buying these properties? I want to ask questions. Yeah, go ahead.
Where do we buy them?
Yeah, at what rate are you buying, or what price point are you buying these properties to short-term rental?
We buy them like 40 to 50 cents on the dollar, and then we got them completely. We got private baths to every single bedroom. We just completely redo the whole thing.
Wow. Okay, so I guarantee you, what's your name? Steven. I guarantee you Steven's got someone sending him wholesale deals. Maybe you're doing it yourself. Yeah, got it. Okay, so he's locking up deals under contract, and instead of wholesaling them out, he's just taking them under, and he's locking them up. Super smart. And I hope you're using the pace more method on some of these. Good. So seller carry, lease options, They're excellent ways to creatively acquire assets and then arbitrage the capital on the back end. A lot of this is jargon. It's a totally different presentation for the day, but follow Pace. He's great. You got to buy it right, guys. You can't overpay for properties. Now, 123 Main Street, Scottsdale, Arizona. Are you going to buy the property in 2023 of Q1, or are you going to buy the property in 2021 of Q2? 2023, right? What's it worth in 2023?
Less.
Yeah, probably 30% less. Okay. Got to buy it right. Got to time the market right. This is the last piece of, I guess, the short-term rental business is you got to build the right systems. You got to have the right team members in place. There's a lot that goes into short-term rental management. Okay. This is just a screenshot as an example of what your Airbnb profile might look like when you're setting up a listing. You can have a message automated and sent. I have a team of Filipinos behind everything, managing concierge, calls, guest interactions, errand runners, cleaning coordination, maintenance, vendors, landscaping. We on one property in Payson, we literally have one person that shows up to the property just to put bromine in the hot tub. That's all they do. They put clarifier and tablets because the cleaner doesn't want to do it. We do that. You have to have a dialed in automated system. Everyone needs to know exactly what to do. They need to have a standard operating procedure. They need to know what happens in the event that someone shows up to the house and the house is not clean. That happens. Or when a cleaner misses a cleaning. That happens too. I'm getting some heads. Happens sometimes. Way too much to talk about now, but just know that like any business, you're going to run into problems, issues. You need to have a dialed in, written down process, standard operating procedure, and teams and software behind it. Yeah, cleaning and maintenance. Who struggles with cleaning? I struggle with cleaning even. Why? Because it's an ongoing struggle. It's a revolving door. You're always switching out cleaners. Cleaners are hard to come by. Go ahead. Why are you struggling with cleaning?
Well, the first cleaners I had were terrible. They didn't do their job. Like, there was complaints. I was going in there cleaning up after them.
So cleaners, you need to have a cleaning checklist. If you're going to get a short-term rental, if you're going to take your landlorded property, let's say you have a property you want to put on Airbnb or VRBO, and you go spend $50,000, $60,000 on furnishings and upgrades and design, and you're like, sweet, I got an Airbnb, you post it, you get brand new photography, it looks beautiful, and you get a listing and someone shows up and then they leave and now someone's got to go clean everything. We got 8 beds in there and all 8 beds were used, but you got one washer dryer. How do you do the laundry? You have backups. That's right. I don't know if anybody said that. I just thought it happened. But you have backup sheets and backup blankets, but you gotta wash the laundry, right? Your cleaner is probably your most important person in the whole short-term rental process, the whole thing. Some say, oh, it's your designer, interior designer. Oh, it's your furnishing specialist. Oh, it's your no, it's not. It's your cleaner. All that is easy. I can make a Picasso of a building. That's not hard. Anybody can. You have the right funding, you have the right location. It's setting up the cleaning for a property. All right. Something that I do for those who have short-term rentals in the room, maybe this will be a gold nugget for you. I bonus my cleaners. Okay. For every 10 5-star cleaning rating they get from the guest, I give them a $100 bonus. Okay. Some is $75 if it's a smaller condo. Some it's larger, but I give them a bonus. They're incentivized to do a great job. Okay. That's an old slide I don't use anymore. Okay, you gotta set up the property properly. Say that 5 times. You gotta have a Ring camera or any camera. I like Eufy. I use the brand called Eufy. They actually came out with a lock that has a camera built into the lock. It's a smart lock, kind of creepy, but you can see who's at the front door. Okay, you can also revoke access or assign a new code. So it's the lock and the camera built in one. You must have a cleaning closet in your building. Do not rely on your cleaners to show up in their cars, in their trunks, and pull out a Hoover. You need to have all the materials that they would need to clean the property inside the property. It needs to be an assigned cleaning closet that is not accessible to the guest. Have to. I've done over 25,000 hosted stays. I know you have to have this on site, okay? Got to onboard your cleaners, got to make sure they're legit, got to make sure that they know what they're doing. If you want to know the exact demographic of the best cleaner out there, you can reach out to me personally. I will tell you. I don't know why I haven't updated this. We don't use Guest anymore. We use IGMS. IGMS is a great software. I don't withhold any secrets. I'll tell you exactly what I use. IGMS is the best software out there for short-term rental management at the best rate. You got to do a property walkthrough to make sure it walks and feels good. If you set up your short-term rental, here's a really cool hack. Call all your family and friends up and get 10 bookings from your family and friends. Airbnb is going to make you charge $10 minimum, but tell your family and friends to give you 5 stars and then give you honest feedback over the phone. Okay? Really cool hack. It'll boost your rank inside of Airbnb, the app. Okay, let's recap real quick. Got to buy the property right, in the right area, invest heavily in the experience and quality. Build a great cleaning maintenance team, use software to track tasks, calendars, and effectiveness. Set up your space well before you begin. Be prepared. Use a great vacation rental management software. Be unique. Of all these things, I think this is probably the most important. It's probably what I mentioned to you in the very beginning of this presentation. The most important piece is you got to be different. If you're not offering anything different, nobody cares. Okay, and they're going to show you by not booking your place. So here's something that might be for these guys right here. These two gentlemen are attorneys. They're great. I lock up a lot of deals like this. Okay, a lot of deals. And this is, I think this is my final slide. This might be one of the last 3 slides. But right now is the time to lock up amazing deals on terms. If you do lease options, if you do seller carry, if you do sub 2, if you don't know what any of those are, don't worry. Research it, learn it, understand it. You can lock up some great deals this way. All right? And there's so many variables on how you lock up. Here, let me give you an example. So there's a house right now in Mesa that I'm actually negotiating that's not selling on the market. It's in North Mesa. Okay, I love North Mesa. And they're willing to take full price if I pay 5% down and pay the broker representing the deal out of my own pocket, which I'm okay with. And the seller will carry on a 1.8% interest only, because it's free and clear, 1.8% interest only, 120-month term. Okay? There are no underlying liens on this particular property. So this is what I'm negotiating right now. They don't like that I control the asset with the title. They don't want me to have title. So we'll turn it into a lease option. That's fine. All I'm going to do is change all the legalese to different verbiage. I'm going to say option. Option fee. Okay. I'm going to, instead of my down payment, I'm going to have an option fee. Okay. I'm going to have a monthly payment or lease payment. Although what I'm trying to negotiate is 100% of that payment goes towards principal buy down instead of just a lease payment. So there's some really unique creative ways. I really challenge you to speak with these gentlemen about it. They can really help you out. To lock up deals, especially right now, in the next 2 years, it's going to be it's feeding season for investors. Do it ethically. Don't do it taking advantage of individuals. I believe me paying full price is not taking advantage. I think it's a great rate. If they agree, great. We're going to notarize. Everyone's going to agree and sign. Anyways, totally different presentation for another day. I just wanted to throw this out here for you. If you're looking to lock up properties, definitely do it like this. You take a picture and book a call with me. If you guys have a short-term rental, you want management, we charge $350 a month per listing, flat rate, no matter what. We're not going to charge you a percentage. We're not going to take commissions. We're not going to charge you a fee for sending your errand runner. We're not going to charge you a fee for picking up the phone. It's $350 no matter what. Your Scottsdale bougie, $20,000 a night, which you might go stay at a couple nights. Maybe not. To like a condo. I will say we turn a lot of people away that might have some questionable short-term rentals. I've seen a garage with no AC. on Airbnb and people bring it to us. Hey, can you manage this? No, thank you. Okay. If you guys want additional insight, help, coaching, mentoring, whatever, shoot me an email, take a picture of the slide. I'm full-time doing other stuff right now, but I still have time in my schedule to help you maybe navigate the waters of the short-term rental game. So, guys, thank you so much. Appreciate it. This is fun.